Fed poll segment. Of course, you'd be aware if you're a mortgage holder that the Reserve Bank actually decided to hold interest rates earlier this week, which was a bit of a relief. Peter White is the CEO of the Finance Brokers Association of Australia and joins me now. Hi there, Peter.
Good morning, Tatiana. How are you?
I'm good, thank you. Now, before we get into the idea of negotiating your loan, what's your official position in the Brokers Association on that move by the Reserve Bank? I guess it's not enough, really, is it?
No, it's not enough. It is a good first step, but we most certainly believe that the Reserve Bank needs to actually pause on interest rates for at least 3 months to be able to see the flow-on effect of what the human data shows, the human impacts. You know, they make their decisions off data that could be 2 to 3 months old. You don't see the flow-on effect into the market and how people really are surviving or not with what's happening with the movement. So there needs to be a longer pause and a stronger look at what is actually being reflected in the marketplace and how people are going with it.
And you're also calling not just for, like you say, that minimum of 3 to 4 months to sort of have that true impact be revealed, but also a bit of transparency from the banks to disclose what the new borrower rates are as well as the existing borrower rates.
Yeah, exactly, Tatiana. It's a real challenge when you get all these promotional activities and advertising activities happening in the marketplace. People go, oh, that looks really good. And on the surface it does. But when you look behind the scenes and actually see what the existing borrowers are paying, it's around 0.4 to 0.5% higher, so upwards of 0.5% more as an existing customer. It feels like it's almost a loyalty tax. But it's not transparent. If I can go back, I've been in lending quite some decades, I can go back in the day and there was always things called honeymoon rates, and everybody knew this was an introductory offer and then it would go up. But these days, there is a distinct lack of transparency by the banks around what's actually happening in this regard. And we've been calling on government and regulators to clamp down on the banks to actually make it very transparent to understand that I'm offering this rate, but existing borrowers are paying a significantly higher rate. So it's almost a caveat emptor position. Beware that what looks good may not be so good. Nothing's free in this world, and if it looks too good to be true, maybe it is.
That's right. But look, in good news as well, because it's not all doom and gloom. So I thought we should talk to you today because I recently approached my bank about getting a reduction on my loan. Now, granted, I had not ever approached them about that. I was very lazy. I thought, it's hard enough talking to a telco, let alone the bank about your mortgage. I thought, I've got no patience for this. Now, because it had been so long and my interest rate was so high, I got nearly 2% off my loan, which basically would buffer me for another, say, 7 or 8 interest rate rises, which is fantastic. I think and when I shared this with my friends, a lot of people didn't realise that this was even an option.
Yeah, most certainly. Whenever you're looking at refinancing, the first thing you need to do is to go back to your bank and say, I want a better deal. I can get this here, I can get something somewhere else. What is it you want from me? What can you do for me to want to stay with you? And look, the reduction you've got is very classic in regards to people just keep paying their mortgage year after year after year and don't realise how much their interest rate has creeped. Like I said, on average, the data shows it's about 0.5%, and there you are at 2%. And there are so many people in the same situation. And when rates or cost of funds are going up, which are pushing rates up, people need to negotiate this with their banks or look for better options if the bank won't help them.
And actually, I guess like telco deals, when I disclose this to friends, one friend said that he actually makes the effort to call every couple of months and ask what that new borrower rate is and make sure that his current rate is in line with that as well.
Yeah, very smart move to do that. It's you'd kind of think though you shouldn't have to do that, and that's probably where I land with it. So, well,
fair enough.
Why should I have to do this? You should be playing fair and transparent to everyone without me having to chase up and hound whether or not you actually are doing the right thing by me or not.
I think a lot of people are surprised that it's actually it is quite easy to approach them about this because it's become quite a competitive market now, hasn't it, with all these interest rate rises and all these different kinds of borrowers, lending institutions, I should say.
Yeah, there is. There's lots of options, and there's an old anecdote. It's cheaper to retain a client than to find a new one. And this is exactly the case, though. It's a lot easier to keep your client than try and replace that client with another one in the future. So it's a smart business move or marketing move, however, but smart business move to say, I do need to negotiate with people. I just wish they would be more proactive rather than putting people through the pain of going through telemarketing centres or call centres and so on to actually be able to get to negotiate that. And look, and for some people, it's a very challenging thing to have to do. Not everybody can pick up the phone and make a phone call.
No.
There's lots of people who find that very intimidating. And that's why, again, I say they need to be more proactive and transparent in this to ensure that people don't have to go through what might be for some is an intimidating process to try and speak to somebody to say, hey, I want a better deal. Help me out. What can you do for me?
Well, speaking of, I guess, being intimidated, it's one thing to ask for a better deal, but if you're really experiencing hardship and just not able to pay your mortgage, what do you suggest people do there in terms of contacting the bank? What can they do?
Yeah, well, the banks can do a lot. The laws have changed over many years to ensure that there is lots and lots of protections and built-in mechanisms to help people who are heading into or are in financial hardship issues. They can't make their payments. So, unfortunately, again, it's picking up the phone. But look, in all honesty, their hardship areas within the banking system are very, very good these days compared to where they were, because there's incredibly tight laws around all this that basically says you must help. So if you put your hand up and say, I'm struggling, the bank is duty-bound by law to help you out, and they do. As challenging as picking up that phone might be, it is the thing you need to do sooner than later because it will solve the problem and the heartache a lot quicker than letting it go on and on and on. Because the last thing you want is for the bank to then take you into what they call mortgagee in possession and basically sell your home from under you. That's the worst thing that can happen. So
absolutely,
get on that phone early and talk it through.
And so what are some other options? I know you can do interest only, which I know isn't maybe ideal because you're not paying the principal off, but still an option for people.
It is. So quite often when you go into these hardship areas within the banks and so on, they will give you that option to be able to maybe pause payments for 3 months or to go into an interest-only payments for a little while to get back on top of things. And these things are all premised on there is an opportunity to get out of the problem. So there's a reality in this says if you're in a problem that you're never going to get out of, the bank will only go so far for so long. And they'll say, look, we have tried, we have listened, we have helped, but this is just getting worse and there's no way out. And that's where people need to make some really tough decisions when you're doing it to yourself and say, should I sell my home? Am I at that really hard point in time that it's better off for me to control my destiny than to let the bank do it and sell my house? And that's a really hard step, but it's one to be thought through if you wind up in that situation.
Yeah, it's really worrying, isn't it? Because I have heard of cases where they're also, and I don't know how ethical this is, also sometimes offering to extend the term of someone's loan, by up to 10 years, which is a little scary.
It is, but again, it's all about reducing the repayments to make it more manageable. So, it may be a solution, but try and look at it as a short-term solution, but it's something that long-term you can manage. Because, as you say, if you add another 10 years to your loan, that's another 10 years worth of interest. Right? In principle, you're playing on the other end, so your loan goes for a lot longer. And there are always options because some work in some cases and others work in others. So different horses for different courses sort of thing. So it's good to have all these options to be able to work through to say what best suits me, and then take that option and keep control of what's going on and don't let it get out of control, because when it spirals out of control, it gets pretty messy.
Yeah, you definitely want to be the one in the driver's seat for sure. And speaking of interest though, Peter, and it's interesting, some people are relying more on credit, which of course, the credit interest rates are way worse than what the Reserve Bank's putting us through. And then of course nowadays there's a lot of those, afterpay options, payday loans. What do you make of the regulation or lack thereof in that space?
Yeah, so there's new legislation coming through into that after-pay space or buy now, pay later environments. And I think that's a very good thing because, it's great to have access to these sorts of facilities, but you've also got to manage it within your means. And it's like anything is, well, you buy a TV, you buy a car, it's an emotional experience. And sometimes that takes over and you just go, I want it, I'm going to get it. But you've got to manage that out because these things have an impact on your credit capabilities in reflection to a home loan or trying to get a home loan. And so you've got to make sure that you're balancing your finances out in a manner that you can afford to do and not just letting the emotion of getting whatever it is drive what is happening in your life, because it's way challenging. I'm the worst. If I see something, I want to go out and buy it. Same as everybody else. But you got to sometimes, especially in these times, it's the hardest. You got to hold back a bit. So the problem is interest rates have been jumping so quickly so often for mortgage holders, and of course this is impacting people who pay rent as well, because behind being a tenant, there is a landlord who's probably got an investment loan and their rates are going up. So it's a flow-on effect somewhere. But you've got to watch that this thing's been jumping so often, and I really hope we're one step, if not done, as far as rising interest rates go. But you've got to be able to manage your cash flow, and that has been changing so rapidly with all these steps. You just got to make sure you're conscious of that, you plan for it, and don't go too far, too hard, too quick. And let things settle down and then reassess your position.
Some good advice there, Peter. And you don't need that latest plasma TV, okay? Just back away.
Sure? Oh, okay. I'll talk to my wife.
No, she asked me to say that to you. So anyway, Peter, a pleasure to chat to you. Enjoy your weekend.
You too. Thanks so much.
Thank you so much. That's Peter White. He's the CEO of the Finance Brokers Association of Australia. Coming up,